Hi there, I'm Giulio Bonifacio, CEO. Well, I used to be CEO, excuse me. I'm executive chair. I stepped in as chair last year on a project that I've known about for a long period of time. And I think when you look at what's occurring with decarbonization and the going green thematic, you look at the need for copper on a go-forward basis. Large projects are very hard to come by, and this is a project that has got some real size and magnitude to it. It's got a lot of upside as well. I want to speak to a couple of the changes that have taken place. We have now sort of hit the reset on the company. It was formerly called Cadente Copper. It's now called Alta Copper. We've done a share consolidation. We've worked with our big shareholder. We have a $60 billion company behind this called Fortescue Metals. They're clearly very interested. We're not going to be the builder of the project, but we can do things along the way to add value, such as advance the community, license the agreement. Go back in and drill. It hasn't been drilled since 2013, and it's got nothing but upside. Now, one would argue, why add more drilling to something that's already sitting on 16 billion pounds copper, gold, and silver, copper equivalent? We'll break it out into details. You can see on the first couple of bullet points, 2 different deposits. Rationale, simply it's bigger, and there's just targets that were left that should be chased and drilled further to identify additional resources. That simply makes my job easier. It's about executing a transaction. So most copper developers, frankly, single asset companies, they can't be built by the individual company. It's just too complex, it's too difficult, they don't have the execution expertise. I have been in the copper space for a long time, founded a company called Nevada Copper in 2005, advanced the permits on it, started construction, and then a group came in, went plus 50%, so I stepped away from it in 2018. Shortly thereafter, stepped in another company called Copper Bank, acquired an asset called Copper Creek, brought in the current group that's running it. It's now called Faraday. It's a space that I know relatively well, but projects with margin, projects with size matter. And so when you look at how do you replicate a project like this, you'd probably have to spend north of $150 million US. And that's kind of a key point. We're in a cycle here that we haven't yet seen the activity in the M&A space. That is going to change. I was attending a presentation earlier today, and the gentleman that spoke about it, there was a lot of activity from about 2005 to 2011. That sort of dissipated, and it's been kind of quiet up until this point in time. And with what we've seen in the copper space, all copper developers have come off in value. But realistically speaking, there's just real opportunity. You can't just turn on a light switch and find projects like this. And so I think we're far enough advanced. I think de-risking it is a big part of what we think we can do. And so we say new strategy, but it's really let's go back and drill it. Other benefits of drilling, we get to employ the community. That helps with the community license, demonstrate that it's a bigger resource, and put out studies. The biggest catalyst that's going to come out on this company in recent years is going to be a PEA that comes out in Q1. Now, that's going to talk about the bigger project. Again, if you think back to the thesis that we're not the builder of the project, let's focus in on the study work. Let's look at demonstrating what this project produces. It produces and will produce, and we're well advanced into it with a study that's being put together by both Ausenco and Whittle Consulting. Whittle Consulting, notable engineering group. They stepped in on equity, did the equity financing at 72 cents. Fortescue Metals has a preemptive right. They maintain their interest on an ongoing basis. Our last financing was done at 50 cents. We're currently trading at 30 cents. So you look at upcoming catalysts, you look at where we sit on the curve. Now, every single one of these projects on this curve likely requires a buyer. We have one in the backdrop already. They own 25%, and it's a $60 billion company. So if you focus in on what they're endeavoring to do, they want to move into the green space. They like copper a whole lot. They're paying a lot of attention. They have 2 board seats of 7, and they're actively involved. They're happy to work with us, but as I've said to them very frankly, I can only support a transaction at a proper valuation, and we're not there yet. And so it's really about what do we do in the next 12 months to garner that interest, advance it. I think the catalyst that we put forth by way of this PEA will be very, very robust. But if you look at this slide, you can see that we're at the bottom end of the curve, yet we've got one of the bigger resources, potentially have more upside, and we've got a set of economics that are going to come out in Q1 that, if anything, match up nicely to many of these companies. Project hasn't been drilled since 2013, 85,000 meters in total. That's very, very modest for any system. You look at where we sit in terms of size, you look at where we sit in terms of grade, you factor in the low strip ratio of 0.66 to 1, that drives a margin that's very, very attractive, and on size, and size does matter. Now, it's a forgotten story. The intent of me getting more involved was to to activate that interest. And I think we've made some changes, but the activity over the next 12 months is more about how do we add value to the project, but what kind of transactions that we can bring in that are not dilutive, that add value. Now, I will add that I'm a big enough shareholder. I've acquired my position recently. I've always participated on the equity side of the equation, both with Nevada Copper. I was the largest shareholder. Faraday, I'm a very large shareholder of. This is another one that I like a whole lot. I think that we can push it forward. It's a little bit less advanced than those other two, but when you look at the size of the deposit, you look at our shareholder register, you look at the modest valuation that we have, I think those speak very well to the opportunity, the upside. How much downside? Very little. How much upside? That's the question. Not the downside challenge, but the upside. Markets aside, capital markets, context of the capital markets, they drive value. As we all know, in every presentation that you sit in on, everybody's share price chart is going in the wrong direction. There's no buyers out there right now, but now's a fantastic opportunity to position in stories like this. You look at the location of the asset, it's northern Peru. People talk about Peru. Peru used to be one of the best places, and now look at what's happening. They're coming out very publicly. They understand very clearly that they need to promote mining. But how many multi-billion-dollar operations exist in Peru? How much of a contributor is mining to Peru? It's very significant. Peru is the second largest copper producer on the planet. Do you think that's going to change? Of course it's not. Now, do we have to go through the various processes that we have to do to permit? Well, I understand permitting. I understand that you have to deal with the stakeholders. In this case, it's a community. Show them how they're going to benefit from the project. We recently held a workshop, very well attended, very supportive. I'm never going to get 100% support, but I don't need it. So the talking heads that point to Peru as a negative location, I think you really need to readdress those kind of concerns and pay attention to the information and understand that projects do get built. They will get built in Peru. It's a big driver of their economy. We're about a 7-hour drive outside of Chiclayo. You fly into Lima, then you go to Chiclayo, 7-hour drive. We've got good infrastructure, good low power cost. Elevation's 3,000 meters. I'm going to go through some of these slides a little faster now because it looks like I've got 7 minutes in total. Is that correct? Yes? Last time I did one of these, I went well over, so I'm going to try and stay within that timeline. If you look at the resource, Norte is the one that's had the lion's share of the drilling, and it represents a significant resource, mostly measured and indicated. So we can move that into feasibility. In fact, in 2013-14, they started in on feasibility. The intent then was to sell, but then copper prices in 2015-16 started to come down in a very dramatic way. Cañariaco Sur, 15 drill holes. It's already sitting on 2.2 billion pounds of copper, the gold and the silver. Very significant. Verde has had no drilling. It's got all the right geological signatures. This is a very systematic system. They drilled out, they stepped out, they had nothing but success. But did they drill in some of the areas for the higher grade, the breccias within the Norte? Did they chase Sur in a bigger way and were more active with the drill bit? They weren't. 85,000 meters. You compare that to the first company I was involved with, we drilled 600,000 meters. You compare it to the last company I was involved with, historically they had 350,000 meters. So you look at the size of this system, we can, of course, move to feasibility study that starts the timeline on permitting, which is very key to us, subject to funding. The fact that the directors, officers have enough skin in the game, and that's a big part of that from my perspective. We're going to be very sensitive to what we do and how we bring in the funds. The resource, you can look at that on your own, but you can see that we're already sitting on Norte at over 1.5 billion tonnes. Mineralized material, you can look at the very differing cutoff grades, but with that strip ratio overlaid at 0.66 to 1, clearly there's margin there. You look at this slide, I think this is kind of interesting, and then there was a view that you should demonstrate to the marketplace that you could build it for less. And so they came out with a PEA in 2022 that looked at running it at 40,000 tons a day for $1 billion. It created an NPV of $1 billion. So from a capital intensity perspective, very, very favorable. Of course, it was leveraged to copper prices. That copper price goes higher. It's very, very significant in terms of the returns. But at $3.50 copper, you still had a very profitable project. Now, when you look at the fifth bullet point down, you can see that in the first 6 years at 40,000 tons a day, you on average produced about 120 million pounds of copper. In the subsequent 22-year period, once you did the expansion to 80,000 tons a day, your production profile increased significantly to close to 200 million pounds. If you go back to the previous PFS, completed in 2011, at 95,000 tons a day, it's a soft rock. We know that we can operate with 1 SAG mill, 2 ball mills. We know that we can process at 100 to 110,000 tons per day. That's what this new model is going to look like. Our big shareholder came back to us and said, hey, and that's around the time that I got more involved and stepped in as executive chair. Why would you build it that way? We've got the balance sheet. We would look at it in a completely different fashion. We've got the balance sheet. We're a bulk miner. We understand what this looks like. We know that the CapEx is going to incrementally go higher, but if you produce and process at 110,000 tons a day, as an example, you're going to produce north of 300 million pounds of copper a year. That's enough to move the needle for most majors. And that's the focus. We're not going to be the builder of the project, but how do we advance it accordingly? And I think that's the key point. Slide 13 gives you a snapshot on the economics. As you can see, at 350 copper, pre-tax pre-tax $2 billion, post-tax $1 billion. Clearly, there's an opportunity from a tax standpoint. I'm a CPA. I understand cross-border tax. I work with Total. I work with some large companies, small companies. Founded that company in 2005. I know there's an opportunity in that, but I also know, running models historically, what you do in the first 10 years drives the model. So if we're producing north of 150,000 tonnes of copper per annum, what does that look like? What leverage? So that major catalyst that's upcoming is going to be sort of the precursor to all deal discussions that we have, inclusive of the discussion that we have with our big shareholder. They're very involved. They've just recently added a director that is one of their senior guys. He's a builder of projects, and I think that speaks volumes. But like many copper projects, we're all levered to copper price. At 350 copper, we see that we generate a very good return. At $5 copper, it goes up exponentially. Now, if you look at what's occurring within the copper space, it's going to go in a deficit. You layer in the EV thematic, the decarbonization, the go green, letting folks understand that you need this metal for pretty much everything and anything that you use in our day-to-day lives. And Friedland speaks to it very, very openly. What is copper going to trade at when the world starts to realize there's not enough of it? It's going to go higher, and I think it's created a new base. But at 350 copper, which is around what it's trading at today, I think it's about 360, 370, we have a very profitable project. And we have a big partner in the background that wants to buy it, ultimately, if we continue to execute on our plan. And that's a big part of my involvement. Step in, assist the founder of the company. She's done a fantastic job over 20 years. It's more about working with her with a slightly different perspective on how you enhance value. You look at our C1 costs, and this is kind of interesting. Okay, so 90% of the revenue is copper, the rest is gold and silver, so there's another financing opportunity there from a stream perspective or a royalty perspective. As I noted, the founder of the company, Joanne Fries, president, CEO, didn't put any burdens on the project. There's only a 0.5% NSR. If you look at many of those copper projects that you show on my comp slide, most of them carry burdens of 2%, 3%, 4%. Pumpkin Hollow, Nevada Copper, we acquired it. It had a 6% NSR. That's a big burden on any project. This project's only got 0.5. So can we look at selling a royalty to create a funding source? Of course we can. Is that an ideal optimum structure for us to consider? Is there a better route to take with our big shareholder? Those are things that we'll have to consider and move forward accordingly. But we are funded to this major catalyst, which is the PEA that comes out in Q1. I think that's going to be very interesting. You look at, wow, he speaks pretty confidently about how they can produce north of 300 million pounds. Well, I'm relying on a past pre-feasibility study done by AMAC. The gentleman that's one of our key directors and advisor was a senior VP at AMAC, stepped into Cadente, Sean Waller. He oversaw the study work. The study work that we have on this project is at a high standard, and that's a big part of any discussions that we have with critical groups, strategic groups. They'll look at the data, they'll assess the data, but it's not an early stage study that you see with many microcaps and junior companies. It's something that's well enough advanced. But as you can see in the darker orange, and this was predicated on a much smaller resource, in the first 10 years on average, 311 million pounds of copper. That's significant. Now you layer in the additional resource that we've added, Cañariaco Sur. You layer in the fact that the resource is so much bigger than when it was initially put forth on this PFS back in 2011. You'll see that the numbers we put out will be very robust, but that'll be the baseline for us to have the various discussions with the streaming companies, the royalty companies, our big shareholder. But again, when I go back to this one slide, and I'll do this, I got 6 seconds, see if I can do it quickly enough, and I can't because of the technical difficulties. I'm not going to bother. The reality is we have a very good opportunity. Thank you for taking the time today to listen to the presentations. And by all means, if you see me in the outside corridor and you have further questions, just reach out. Happy to answer those questions for you.
Thank you very much.
And on time.
Yes.
There you go. Thanks, guys.
Thank you.